The Real Estate Corner. Welcome to my video cast for first-time buyers. Today we're going to talk about first-time buyers and the questions that we get asked most from first-time buyers. I'm Janice Christie with LePage West Real Estate Services. I'm a realtor and a certified negotiations expert, and I've been a realtor for 8 years. My background as a financial accountant for 20 years and a nurse has helped me to help my clients get their dream homes and then revive them when they need it. No, I'm kidding actually. Mortgages though can be quite complicated, but they don't need to be. My guest today is Todd Skeen, mortgage broker and financial advisor. Welcome, Todd.
Thank you, thanks for having me.
You're welcome. So can you tell me a little bit about your background as a mortgage broker?
Sure, so I've had various roles in financial services for the last 25 years, not all here in BC. I've worked in major financial centers around the world. New York, Toronto, London, Frankfurt, and San Francisco. I have completed about $5 billion in transactions in that time. I also have an executive MBA, and I've been trained in negotiation skills, which comes in handy when negotiating with lenders. And I take a strategic planning approach to working with my clients so I understand their full financial situation and life stage. And I look at creative approaches to finding the right mortgage solution for them.
Well, thank you. First-time buyers have some common questions. I took a list of all of these questions that commonly asked by first-time buyers, and then I compiled them and I just jotted them down, and we're going to go through them today as a hit list for our first-time buyers that might be tuning in today.
Great. Okay.
Okay. So, what documents does a mortgage broker need to process for a mortgage application?
Yeah. So this is the first step in the process. Is you want to gather all your documents, and when you work with a mortgage broker, they can tell you exactly what you're going to need for your situation. Documentation follows the income, employment, proving where the funds are coming from for the down payment, and the mortgage broker will also generate a credit report that will have your credit score and credit history. And the documentation is different if you're salaried, if you earn 100% commissions, or if you're self-employed. So your mortgage broker can tell you what those documents would be.
Okay. So what the first thing they need to know though, as a buyer, is they need to know how much they qualify for. So they need to come and see you before they go and come and see me, actually.
Yeah, exactly. Yeah. So you want to get pre-approved, and there's a difference between pre-qualified and pre-approved. Yeah, pre-qualified, you're typically just answering a handful of questions, usually an online survey, based on your income, your assets, and how much you're paying each month for your credit products, like a credit card or car loan. That'll give you an idea of what a lender might be willing to lend to you for a mortgage. However, you do want to actually speak to a mortgage broker and have all your documentation together provided to a lender so the lender can verify all of your information and then come back to you to tell you what they'd be willing to lend to you. And they'll give you a confirmation letter or certificate of some sort saying this is what they'd be willing to lend.
So the buyers need that pre-qualification, that letter before they can actually write an offer on a property.
Well, it certainly gives you the confidence that you know you're making an offer on a property that you're going to be able to be qualified for.
And to able to afford it.
Yeah.
So commonly buyers ask, how much do I qualify for?
So let's say your household income is $100,000. We'll just use that as an example. And you're putting 5% down on the property. Your maximum mortgage amount is going to be around $473,000, and with the 5% down, that means a purchase price of around $500,000 for that home. So you're going to be in the market looking for properties that are around the $500,000 range.
So that's about 5 times your income, basically.
About 5 times your income. That's right.
Okay. So that's a really good rule of thumb. Yeah. And how much do I need though for a down payment then?
Yeah, so if it's less than $500,000, then you need 5% down. If the property value is between $500,000 and $1 million, then for that portion only, you need to provide 10% down. Once you get above $1 million, then the required down payment is 20%.
Right. Okay. And then what about the CMHC requirements for that? For the down payment, because I understand that's higher. That's at 20% or something, isn't it?
Yeah, so you're talking about mortgage default insurance.
Yes.
So a lot of first-time home buyers are surprised. They don't know what mortgage default insurance is. and that would be natural. Mortgage default insurance is protecting the lender in case you default on the mortgage. So it's a regulatory requirement that when your down payment is less than 20%, you are required to purchase mortgage default insurance, and it's really expensive. So with our $500,000 home example, the mortgage default premium is around 4% of the mortgage value. So that works out to about $19,000 in additional cost that you need to consider. It goes into your calculation of what value of mortgage you can afford, but you do get to roll it into your mortgage and pay for that over time. So you don't need to come up with $19,000 upfront in cash.
Right. So we need between 5 and 20%. You need 20% for the CMHC to meet the requirements that you're going to have to pay. So
we talked about a $500,000 home price example. What can you get in, let's say, the Lower Mainland, Fraser Valley area?
Well, I do
for $500,000.
There's quite a few properties, or quite a few condos. I have a condo here. This is Suite 207 at 1618 Grant Avenue in Port Coquitlam. This one is listed at $499,000. It's 24 years old. It's 2 bedrooms, 2 baths, 1,211 square feet. This is listed at $499,000, so it is possible to get a property. This would fit our criteria for a $500,000 mortgage, although there are some costs on top of the mortgage. So you have to pay the property taxes and then the maintenance fees. In this case, the maintenance fees are $372 a month, and then you're also on the hook for the property taxes, which are $1,800 a month, $1,800 per year. And then, though, you qualify for a homeowner's grant of $540. So your net property taxes that you pay once per year is $1,300. So that's about $100 a month. So you have to factor that into your costs as well. So $100 a month for the taxes, $372 a month for the maintenance fees, and then how much is the
mortgage payment on that would be roughly $3,000.
So the total cost then would be $3,500 a month for this $500,000 property.
So you add heat onto that, your monthly heat, and that's really what your housing costs are each month.
Right, that's all in. Yeah. So it'd be $3,500 a month for a property like this one, as an example.
And we hear a lot about properties are so expensive, but it sounds like there actually are quite a few properties out there that are $500,000 or less for the first-time home buyer.
Right. So do we have the, how long does it take to get a mortgage approved once we start the application for a mortgage? How long does that actually take? Yeah,
so you've made the offer, it's been accepted. The lender needs to actually look at that property and verify the property to determine whether they're going to lend. So that's the difference between being pre-approved and approved. To get to approval, the lender needs to get the information on the property itself. What we want to do is within 5 to 7 days remove the subject to financing condition that you put when you made the offer. So within 5 to 7 days you usually get that commitment from a lender. Now the process to actually get to funding the mortgage can take anywhere from that 5 days to roughly 5 weeks. So you want to make sure you're working with a lender that is going to be able to go through that process and complete and fund your mortgage in time for the closing of the property.
And that's called an appraisal.
Well, then you need the appraisal as well.
Right. So because the lender wants to make sure that the property values out at the price that you're paying for it.
Exactly.
Right. Otherwise, they may not lend on it.
Yeah, and there's other issues with properties as well. If there's asbestos in there, if it had rain screening issues, which some of the condos had a number of years ago, the lender needs to consider all those things before they make a final decision on approving a mortgage.
Right. So what is the difference between a fixed and a variable mortgage?
So a fixed rate mortgage, it's a fixed interest rate for the term of the mortgage. And the most popular term is a 5-year fixed rate mortgage. So that means the interest rate and your monthly payments will be fixed for that entire time frame. The variable rate mortgage, it fluctuates with the market. So you can save when interest rates go down. You may pay more when interest rates go up. However, there's normally a spread. So the variable rate is normally cheaper than the fixed rate to begin with. So you've already got some leeway there, even if variable rates increased. The other thing that you need to consider is penalties. So fixed rate mortgages have much higher penalties if you're going to break the mortgage and move into another mortgage product. And that happens. Life happens, things change that are unexpected, and almost 2/3 of mortgage holders will break their mortgage, usually within month 33 to month 38. So things happen.
So 3 years,
About
roughly.
3 years,
yeah,
roughly. That's
yeah.
right. So you do need to consider that, and it's a hard thing to wrap your head around when you're first getting into getting your first mortgage. No one goes into it thinking they're going to be breaking their mortgage, and that's where your mortgage broker can help you and discuss that topic to determine whether you're getting into the product at the right risk level and the right cost level that's appropriate for you.
So what is the penalty if you break a fixed mortgage?
The average has been around $14,000.
That's brutal.
And a variable rate, absolutely.
Yeah.
So really absolutely need to consider that cost because it's significant. Whereas a variable rate mortgage, the breakage fee tends to be around $3,000 to $4,000.
Right.
It's calculated as 3 months of
And what's
interest.
the spread right now? Like a 5-year fixed right now? What is that? The rate?
Yeah. So it depends what lender, what product, and what
Mm-hmm.
your situation is. Some of the better rates right now are between 2.9 and 3.2.
Okay.
And the variable rates are right around the same rate right now. So we're in a rather unique situation that the rates are very similar. So now what you're considering in terms of that risk of where our rate's going to go is, will rates go down or rates go up? And I wish I knew.
Right.
We've heard
Crystal ball, no one knows.
We've heard from economists that
Yeah.
say both things. So it's really hard to say. Now you talked about, we talked about making an offer, going through the completion of financing process now that the property's been selected. But right at closing, there's also some funds that the buyer needs to pay, the deposit. So how much is the deposit usually?
Well, the deposit is usually 5% on the purchase price. Then the deposit is done when at the time that the offer is accepted. Within 24 hours after subjects are removed, that's when the deposit is due. Your down payment is different because that is for the financing, and that is included in all of those costs as well. But we have 5 other costs when you're purchasing a property before closing. The costs are the legal costs, which are about $1,000 for the purchaser to pay. They have, in order to get the land title registered at Land Title Office, they have to pay. A buyer is going to have to pay for the registration. And you usually do that through a lawyer or a notary public. So you're going to have to engage someone there for that. The bank, on the other hand, the lender is going to require an appraisal of the property before they will advance the funds for that. Mm-hmm. And the appraisal fee could be anywhere from $300 to $700, depending on what your financial institution is. Most of the lenders will pay for that. There are, however, some of them that will require the buyer to pay for the appraisal cost of the property. For the buyer's point of view and the buyer's protection, we also oftentimes on a resale property will get an inspection. So the buyers will have the property inspected before they move in before they will say yes they want it, because they want to make sure that there's no untoward costs coming on, no mold and that we spoke about earlier. But there could be other things too, that the roof needs to be done or the furnace is broken down or any number of things. Mm-hmm. So having an inspection is a really important thing. The insurance also, the lenders are also going to require that the purchasers have insurance, or they may not grant they will not grant the mortgage if there is no insurance on the property. So they're going to require that you get insurance, house insurance, before you move in, and there's costs for that too. So there's several costs that you're going to have to be on the hook for. Also, there is
there's the property transfer tax as well. The
property transfer tax is a biggie for not for first-time buyers. First-time buyers are exempt from the property transfer tax, but it is 1% on the first $200,000 and 2% on the balance. So on our $500,000 sample here, our property transfer taxes would be $8,000. Now you're exempt from that on your first-time purchase. On every subsequent purchase, you must pay that.
So there's programs out there to help first-time home buyers. There's this first-time home buyers exemption on the property tax is one, and what else is there? There's
GST. So if you're buying a new property and you're a first-time buyer, the new property, when you're buying a brand new property, there's a 5% GST. So it would be $25,000 on a $500,000 property. Mm-hmm. You'd have to pay GST of 5%, but you get 35% of that back.
36%.
Yeah, 36, okay. So that's about $750 or something, I think, is that right?
So it's calculated, the property has to be lower than $450,000, and so it'll just be calculated as 36% of whatever that 5% GST amount is.
So what would, in our case then, if we were purchasing a property that was $500,000 and the exemption only goes up to $450, what happens to that, the spread between $450 and $500, is that just left, or what exactly happens? Because there's a ceiling on that.
Yeah, it's pretty much a straight calculation of the 36%.
Okay,
Yeah.
okay.
Now, with the first-time home buyer's exemption, if it's $500,000 property, you are fully exempt from the property tax. Once you go from $500,000 to $525,000, then there's a scale. There's a sliding scale. So, and the government's published what that scale is there, and so by the time you get to $525,000, you're not getting any further exemption.
Right.
Yeah.
Okay.
There's also, I'll just step in here, the RSP home buyers plan as well, and that's designed to help first-time home buyers with their down payments. So each spouse can withdraw $35,000 tax-free from their RSP, and they can use those funds towards their down payment. It's tax-free, but you do have to pay it back within the next 15 years. So it's essentially like a loan that the government's granting you by allowing you to withdraw from your RSP. Now you talked about a deposit. So that deposit can also be used towards your down payment as well. So let's say you decided to do a 10% down payment. You've made a 5% deposit. That'll go towards the down payment. And you still need to come up with the funds for that other 5%. So perhaps you end up using this RSP home buyers plan to fund that extra 5%. The other tax credit that I'll mention is the federal home tax credit. So any first-time home buyer, on your income tax, you can claim that you purchased a home, and the federal government will give you a $750 tax credit. So, and that's a gift. So you're not required to pay that back. So you get an additional helper from the federal government.
Right. So how much do mortgage brokers get paid in commission? How does that work?
Yeah, well, so for the buyer, they don't, in most circumstances, they're not paying for our services. So it's a really great situation here where they get independent expert advice, someone working on their behalf and negotiating with lenders on their behalf, and going through that strategic planning process of your mortgage to determine which mortgage product is right for you and your situation. And unless you're in a very challenging credit history situation, you're normally not paying any fees at all. So I would say roughly 95% of people are not paying any fees. Now, maybe you can explain a bit further about the commissions that you charge by representing a buyer, because you're out there searching for homes, trying to find the right home for your clients. You're negotiating on their behalf, and you're working with them through the entire process, guiding them through the home buying process for someone who's never even done this before as well. So what are you charging for that?
So the buy in British Columbia for real estate transactions, the buyer does not pay any of the commissions for the agent. The buyer's agent's commission comes from the seller. So the buyers don't pay that, but the buyers do pay property transfer tax, and then the sellers pay the commission. And the sellers pay commission to the selling agent, and then also to the buying agent, and then it's split also split again between the buyer's brokerage and the seller's brokerage. So everybody gets about 25% of the pie.
So the buyer doesn't pay for your services?
The buyer doesn't pay for the services, for my services.
And they don't pay for a mortgage broker service. So you can get a great team, professional team working on your behalf, and there's no fees for that. So what a great opportunity for first-time home buyers to have experts working on their behalf.
And it's a great time to buy a property, and it's a great time to become a homeowner. So thank you for coming by today.
Thank you for having me.
That's all we have time for today. We have please call me, or if you can click on the link below for any real estate related questions. Call myself, Janice Christie at Royal LePage West, or Todd Skeen at Home Smart Mortgages, and you can click on the link below.
Yeah, absolutely.
We look forward to hearing from you. Until next time, when we'll be covering listing your home for sale.
And we wish everyone luck.
Good luck in this market.
First home.
See you then.